Hi everyone, this is Bagadon, Stock Market Caddy. It is February 27th at about 11:30 p.m. We got a little weakness in the futures here tonight. It's mainly attributable to the dollar yen trade. Yen up, dollar down. A bit of a result of some continued weakening, what appears to be some intervention by the Chinese. Could be some action tomorrow because of that, but we'll see, folks. We're not giving up on our thesis. You've been looking at a weekly chart. This is the S&P 500, a weekly chart that goes back 10 years. You've been looking at this for weeks and months. Depending upon how you trade, there's many ways to trade, and there's many trades in here. But the overall characteristics of this trade have not changed one iota for us. We continue to be of a mindset that the markets are going to correct. It is going to be significant. It will not, in all likelihood, damage the overall trend, but the correction will be so quick, so severe that it will feel like a crash. Now, we are still up here on a weekly close, a little bit of a double top. You can look at divergences on the transforce that we're seeing. We don't think that this is sustainable. If you look at your monthly candles, you're seeing a monthly hammer as they hammer out the shorts. Not just a monthly hammer. We're talking about 3 month, a 3 month hammer up in here. One of the areas, this is a proprietary indicator for us, as is this one here, and what we see is divergence. We're making a new high, but not on what we call our SMC oscillator or our SMC GPS. If you look here, it isn't even close. So this is telling us that this move in price on the S&P is unsustainable. Now we're going to come down. We're going to challenge that 1720 area, 1730 area. And just as we've been saying, that is the area, that's the initial area to break. We don't think there's that much support there as the press would have you believe. When that gets broken, we will be coming down to this area, this target area that we drew weeks and weeks ago. We still think that is the area. Right in here would be about 1600, 1608. And then we think ultimately, we'll be down in here at 1500. Now that may take some time, but this first move down, we break through that 1720 area, we think we'll be at 1600 really damn fast. We're extended both on price, divergence, and we're extended on time. This was our A point, this was the midpoint, and here it is here. I can even change this. Let me go in and change this. This is kind of cool to look at, and change it to a monthly chart. Now the time cycles, these time cycles don't apply to a monthly chart, but let me show you what does still apply and maybe see it a little bit better. On a monthly basis, this is the A point. This was the midpoint. You can see that we're extended, and you can see here even on a monthly, as February draws to a close, we're coming up, making a new high. Our monthly SMC oscillator is not. This barely on a monthly basis, but a lot of area for correction in here. So on a monthly basis, we just don't think that this move is sustainable. You might have the makings of that little dome with house scenario, eyes of March. That's going to be interesting. But let's put this back to a weekly, and I want to look at the Russell. Let's put this back on a weekly chart so everything comes back into play, into view. Oops. These time cycles. We don't usually show too much of our charts. I don't want to confuse folks, but we like our radar. Now this is the Russell. Same thing. Look here. This is where we broke. We counted back up, just shaking out. If you're going to be shorting or selling a bull market, which this has been a bull move, you've got to sell or short off of resistance. You don't want to be shorting or selling down into the hole. That's where the dip buyers are. So you've got to be doing just the opposite. You got to be selling up at resistance and then trying to challenge. Once again here, you can barely see it. I'll try to zero in we edit this. But on the Russell, where our SMC oscillator is not making a new high, not making a new high here, we don't think that's sustainable. Let's take a look at the Dow. They're all the same. I mean, we don't have our trends drawn up, but same thing. Divergence, divergence. We're not even making a new high up here. This baby's getting tired. You can almost tell too when people and the traders they're getting real frustrated, getting really antsy. This is the cues. This is beautiful. Look at this. That's debatable. This is a not confirming, but look at this move. This is not sustainable, folks. I mean, you can look at anything you want. I don't care if you're trading. You give me trading anything. This type of structure is not sustainable. So we don't think we got much more to go. Maybe it's tomorrow. Maybe they sell this out to the 401k money that comes in the first of next week. If you are in here, you've got to be using options. You've got to be hedging yourself. You've got to know how to get to delta neutral if things go stupid or go parabolic. By the same token, if all you're doing is buying, well, good luck to you. You better have those stops in, and you better be prepared for a gap down. What you're going to do if we limit down. Everyone's talking about the housing season and the seasonality of this, seasonality of that. Let's not forget, we got Putin over there, and as the snow melts, he might start moving tanks. Nobody seems to care about it, but until they do, right? So, in any case, we don't want to see anyone get hurt over there. But you got to be careful here, folks. We'll come back to the S&P. Let's take a look. Here we are. Let's look at the VIX too. I haven't looked at it in a while on a weekly basis. Here we are on the VIX. This is interesting to us. We continue to make new lows, and here is our GPS is not making a new low. Folks, all we have to do is shoot up. We're not confirming this low here. This VIX, we're at 15.5. We could be at 20. We could be at 20 in 2 hours, in an hour. I mean, and if this is so heavily shorted. Everyone totally complacent. If we get into a positive trend and move, I just, you talk about getting in front of a steamroller, picking up quarters. Anybody trying to get in here and play these markets long with much of anything is, I think, they're out of their mind. You can buy in all the macro pictures and all the people who got research analysts. In our view, we think we could, we break out, we clear this little area here of 20. You could be at 30 or 40 in a New York minute. Good luck. Be careful, and we don't change. It takes a lot to have us change our perspective, and we think everything is still in play. So, good luck, folks.